Okay, looks like I'm live. I know. Look behind me. All you have are curtains. It is overcast, cloudy, and foggy here. So all you would see is fog. So we're not going to do a sunset view. We're just going to do this. How's that sound? Okay, what do we got? Oh, we got CFA question. I'll do it. Doing level 2 study. Almost time for exam. That's true. Office hours super helpful. Any last minute tips? Uh, Not really. I would say that whatever you're doing, just continue to lean into it. You know, time to put in the effort, right? You're doing the right thing. You've prepared. You're attending office hours. You're finding them helpful. I don't know why you would need to change or do anything different. Just keep doing that. Welcome back to Canada. I'm not in Canada. I won't be heading back to Canada till raining here almost every day now, and apparently it gets worse. So the mosquitoes are going right up the chart, and I just don't like mosquitoes. So I thought, well, I'll give it till June, and then I'll go back to Canada. Oh, my neck. I'll go back to Canada for a couple of months. I do have a place there, and no mosquitoes. I don't need to stay here. How do you maintain your hair? What is this, girls' night out? How do I maintain my hair? I don't know how to answer that question. I don't really give it much thought. I mean, it's going all silver. I'll tell you that much. But one thing that I am very grateful for, in my late 20s, I started turning silver, while some of my friends started turning bald. And I thought, by the time they're 40, they're bald. I still got hair, but it's you know brown and silver. I thought I'd rather have silver hair than no hair. So there it is. I don't know. Never really thought about it. Why you use OAS in market outlook, and what is important of OAS? OAS is an option adjusted spread. So when you're looking at credit spreads, because callable bonds are the most popular bonds with embedded options. If you're looking at a callable bond, it could be the case that rates are at a place where the bond is near its call price and it won't go any higher because it has negative convexity. So you can't look at the credit spread any longer, whatever the stated credit spread is, taking away all of the value of the spread for the option. So the OAS tells what you're getting paid for taking on credit risk, adjusted for any options. So a bond that has no embedded options would have an OAS equal to its, well, I guess it's Z spread, which is the constant spread above every spot rate. What do we got now? Thoughts on the scenario where Trump takes over setting it? Yeah, that's I guess their party, or the team that he's put together, is looking at removing the independence of the Fed. I did hear that last week. To get that done, he's going to need Congress and the Senate to get that done. That's a big deal. He's going to need a clean sweep to get that done. I don't know. But yeah, to get that done, he's going to need a clean sweep, but he does want to remove the independence of the Fed. It would be great if there were more office hours to accommodate PST candidates. So I don't set the office hours. I don't set the schedule for it. I would use the Serify feedback for that. Maybe next time you're on an office hour session, just to sort of mention that. Good evening from Martinique. Maybe next year, Leafs. I'm learning CFA level 2 material right now. It's super helpful. I heard there's a group for us to ask questions. Where can I find it? On the site, if you mean the office hours, just on the left menu. What is it called? I'll tell you the exact title of it. Click on live sessions, and then office hours are in there. And if you want the schedule for office hours, if you click on live sessions and you click on office hours, the next screen you get will give you a listing of all the office hours. Level 1 is almost all done. Level 2, what's the next session? April 30th. Oh, it's almost all done too. Most of the sessions are done. Yeah, so it's on the site. Let's see. Parents are remodeling their home and they need to access about 80K more. I want to loan them the money, but trying to structure the smartest, most tax effective way to do it. Any advice? A loan is not income. If you lend them money, that's not income. They don't claim any income on that. You go ahead and lend them the money. Are you suggesting you want to lend them the money a certain number? And I don't know why you would even raise this with any taxing authority. A loan is not income. A loan is just a loan. There is no way that you have to structure it, especially a loan between family members. CRA would, even the IRS, I don't think would get involved in anything like that. I watched Market Outlook today. Your GDP analysis broke down the durables, which showed negative growth from it. Will this be a good idea to be contrarian on consumer discretionary? Well, no. No, I wouldn't be contrarian on that. GM had good earnings and raised their guidance. Ford had good earnings. They're in consumer discretionary. No, I wouldn't take it as a sign to be short consumer discretionary. How are you looking to short beta through ES, MES? Through ES. ES would be the way to go, and I'd probably start carefully by selling calls on ES at the money calls. I want to see how the market opens on Monday and what the tone is. I think if you have, I would take a small position on Monday at some point. Hopefully there'd be a rally in the morning. And I don't know where I would go with that position. I would feel a lot more comfortable taking long positions if I had a short beta position. But I'm very, very careful on my long positions because I'm skeptical. I'm skeptical. So having a short beta position would allow me more long positions. Did you get a chance to listen to the All In podcast take on Tesla last week? Sound like they really be. How critical are they going to be? They're friends with him. Like call up on the phone. Hey, how you doing? You want to come over? Kind of friends, not just we travel in the same circles kind of friends. So how critical are they going to be? And to be clear, when I'm critical on it, I'm critical on the valuation, and I'm tax promise. Now I know that there are some companies that are doing self-driving robo-taxis now in very fenced-in geographical areas, on streets that are well mapped out. But these are big companies sitting behind those cars that can self-insure. and they have bargaining power to get this done. They're large enough to get this done in a very limited way. But it only takes one death, and one death is going to happen. There's going to be accidents. There's going to be deaths, and there's going to be lawyers. By the way, the reason insurance rates are showing such inflation, if you look at a couple of 10Ks from the insurance companies, lawsuits, lawyers. One thing that the U.S. has an oversupply of is lawyers, and they need to make money, so they're suing anything and everyone they can. It's lawsuits. I just don't see how you're going to get this done on a scale large enough to make a difference and have the insurance industry come along for the ride while individuals turn their cars into commercial vehicles. I don't see how a municipality is going to allow that on a wholesale level. Just, oh yeah, go ahead. It doesn't matter what road you're on. And I don't see any insurance company going along for the ride at this point in time. So I'm extremely skeptical on anything significant in at least the next decade. You need a smart grid to get that done. The grid turns over roughly about every 50 to 60 years. So if you think about any city street and you go back 50 years, the streets today are different streets than they were 50 years ago. When I say different, it's the same street. It's just got a different surface, right? So if you're going to make full self-driving on that kind of scale possible, you need the whole grid to be smart. You need it everywhere. You need sensors within the roads themselves. No, I'm not saying it's going to be done. Fast forward 100 years, I think nobody will be driving cars anymore. Everyone will be talking about cars. When people had to drive cars, sort of like the time when people had buggies and horses. I think that's true, but that's not around the corner. That is not around the corner. Period. You got to get too many people on board. And you have to have those people have the courage to live through the inevitable accidents and deaths that are going to happen. I don't see that courage. I don't see that willingness. Having dealt with insurance companies in the past, the moment you have a vehicle that's going to be used for delivery or for commercial purposes, it's a whole new ball game. There are some insurance companies that won't even touch it. No, we don't do commercial. You got to go. So you have to find different companies, and your rates are going to be higher. So it's the idea that you're going to have no driver. I don't know that the insurance industry has a policy for that at this point. I don't even know if that exists. The current companies that are running these things right now are self-insuring. GM with Cruise would self-insure. Waymo with Google would self-insure. All of these companies are self-insuring. I don't think they have coverage. Did you upload video 3 of moving to Costa Rica? No, not yet. I'm gonna have to do that from Canada because it's I'm waiting for I have a residency application in process, and I'm waiting for that to be approved before I shit all over this country. because what I have to say isn't going to be, I'm not going to lie. I mean, there is a culture shock in moving here. The culture is different. You have to understand that you are living in a suboptimal equilibrium where you forget about people like me. Take people like me out of the picture and just go down to Costa Ricans. The wealth inequality is unbelievable. You have a corrupt system. You have about 20 families which pretty much own the country, 20, 30 families pretty much own the country. Members of those families are in government. And if they're not, those families own government, and those families have access to bad people that if you want to talk about them and name them and point fingers, you will find yourself dead very quickly. It is a corrupt system. So just to give you an example, over a certain ravine, which would stop people all the way around and increase the productivity, you got to get that bridge built. You're going to need heavy equipment. Heavy equipment that might cost $1 million is going to go through somebody's business for $20 million. You see what I mean? So all of a sudden, $20 million of tax dollars is going to buy $1 million worth of equipment because the official who is responsible for the spending package is a member of the family that owns the company that sells the heavy equipment. You have that kind of corruption going on. So you have a level of, everybody knows it. Everybody knows it's going on. Nobody says anything, and everybody sort of thinks, well, why don't I do it too? So it's in everybody's best interest to do the same thing. So you get this suboptimal equilibrium where nobody has any motivation to be honorable. And it is pervasive. My God, it is almost to a person. It's almost to a person. You shake hands with someone down here, count your fingers after. 1, 2, okay, I got all my fingers. Good. It is a corrupt country. You start to appreciate, America and Canada for that we have, you have people in government who aren't completely honest, but not corruption on the scale that you have down here. Now nobody's really watching this, but I put a video up and somebody watches it from down here and sends it to somebody else who sends it to somebody else who says, hey, isn't this guy trying to get citizen residency? All right. So you want to, before you know what I mean? I mean, you got to be careful because of where you are. The market update you've uploaded earlier today, you mentioned that you were looking to buy TLT at 85. Not buy TLT, sell puts sell puts at 85. So if it got put to me, I'd be more than happy with it. I thought I'd get 120 for it. Moved it to 110. I think it got to 105 at one point. I thought, okay, well, then premium is really weak for 85 puts. 85 now. Last week, I mean, we were pushing down into the 86s on Thursday morning, and I thought it would continue to go. So I was getting excited. I'm going to get my 85 puts, and I didn't. Not able to attend office hours. Are you planning to record it? No, I'm not. No office hours are recorded. Office hours are queued. So there's nothing to record. So that is a good example of equilibrium, where if you offer it, everyone reasons that, well, I'll just watch it later. Nobody shows up, then there's nothing to watch later. It's nobody's, nobody is really, no one individual is causing it, but the convenience of watching it later creates a situation where everybody says, well, why should I show up? And you get nothing. Did you upload video 3 movie? Okay, I already did that. Is this just a CFA chat, or can I ask interest rate questions for Australia? You can ask any question you want. I did answer some CFA questions, but it is really a market outlook Q&A. How do you choose what strike to sell puts on for GM, Tesla, or AT&T, etc.? Do you use discounted free cash? No, I don't. I don't know for the retail investor if it's really worth doing a lot of financial modeling in that sense. It might be worth it to uncover your assumptions, so that if you were going to do it, where it is a useful exercise is the assumptions that you're making, and what assumptions have you made to get to the price. And then if your price is different than the market price, you start changing your assumptions to try to match the market price. You can see what the implied assumptions are from the market. And then as new information comes out little by little, you could say, well, is this above my assumptions or below? Then you can start adjusting whether you think, well, okay, all of this is coming out above my assumptions. I'm going to get higher. Maybe I raise my target price. But your assumptions are your assumptions. The market, there's no guarantee. Well, it's no guarantee that the market widely shares your assumptions. I do it based on the deltas. I do it based on where I think good support is, and it's. I don't want to say it's experience, and I don't want to say it's intuition. It's sort of a mix of two. That after you understand a company and you be doing it for a while, you sort of get a feel for where you think a price that you'd be comfortable at is. That's basically how I do it. By the time office hours open, I either have too many questions or didn't learn it yet. It's not. Do you set up notifications? Where'd that go? On IBKR to track if something goes on sale? No. You know what gives me great notifications, believe it or not, and it's free, is Yahoo Finance. Set up notifications on Yahoo Finance. It's faster. I don't really need anything on IBKR to tell me if something goes on sale. I have two computers, the one in front of me, and then there's another one right there, and it's on all day. And while I'm working here, it's, I can look over. I've got some charts that are live that when I look over, I can see where it is. Thoughts on the state of higher education universities? What do you think about the political takeovers of universities during election years? I don't know what to think about that. I think yeah, it's that's a tough one. On the one hand, you do want to encourage critical thinking and free thinking, but on the other hand, when that critical thinking is the result of education that is ideologically one-sided, then there's a bit of a problem there. So universities have always leaned left because they're idealistic. And it's in the university system, you are shielded from a lot of the realities of the real world. So you can think more idealistically, more theoretically, and perhaps without the burden of knowledge, right? But in the last 5, 6, 7 years, universities have not only just leaned left, but have leaned even more left to the point of silencing almost any professor where you're getting the sort of misguided thinking on campuses that you've gotten. The idea that you can shout down an idea that you don't like. The hell is that? You don't like an idea, construct an argument to tear it down. That is the most effective thing you can do. Shouting it down tells me that you have no intellectual defense at all, and you have to resort to this sort of hoodlum thuggery to make your point. So if adults have to show up on campus because the inmates have taken over the asylum, I agree. I think that some ideologies have taken hold of universities to the point where if you disagree, even on a simple theory, if you disagree, you are called names, you are ostracized. And even the professor might even ask you to leave the classroom. So I think that the safety and security of the institution and the isolation of the institution from the real world has become its biggest threat. That it thinks it can dictate an ideology from the tower that the population would think makes any kind of sense. There's an old expression that about ideas that some of them are so crazy, only an academic could hold it. Because you do have to be isolated from the world sometimes to come up with some of the theories that they do come up with. Yeah, I think I think that universities today need to be snapped back into order and reminded of exactly what their mission and their mandate is. Right? It is not indoctrination; it's education. And it is producing a range, it is creating critical thinkers, regardless of what you currently believe or think. So if they are misbehaving, fine, step in, push them around a bit. Maybe they deserve it, slap them around a bit. Yeah. So 30-day expiration, 65 puts on CVS, $7. What are your thoughts? CVS? Do they have earnings this week? I don't know. I don't know enough about CVS or where it's sitting. It doesn't matter what I think. It matters what you think. If CVS is put to you, are you comfortable holding CVS at 65 for a number of years? Let's say that you went into a coma and it was going to be put to you and you had to hold it. Are you comfortable with that outcome? And if you are, well, then there's no downside, right? Don't I have to loan on the minimum interest rate if it's not considered a gift where I have to pay gift? No, you don't. Can I do an interest-free loan? Yeah, you can do anything you want to a family. It's a family member. So yeah, you can do interest-free loan. You can do anything you want. Who's going to know unless you say something? I mean, who's going to know anything about that? You lend somebody some money. CRA is not going to get involved in stuff like that. Even if you get audited and they say, "What's this?" You say, "Well, I lent my parents some money. And then they gave me a gift. They didn't pay me interest. They gave me a gift." Well, people are free to give money to whoever they want. I can gift you $1 million tomorrow if I want. If it's a gift, you don't have to pay tax on that. I'm free to give away my money to whomever I want. So no, you don't have to charge any minimum interest rate. Now, if you have a company and you have a loan from your company to you, it's a little bit different. Revenue Canada is going to get involved in that. Revenue Canada will then say, well, there should be a rate of interest. Now you're paying yourself. You own the company. You're only paying yourself. But there is a, you can do a loan to shareholder, a shareholder loan due. And then I think you have a year or 2 years to get that loan off the books. Revenue Canada really they don't really turn over those stones very much, but depending on how much you're lending yourself, what you're lending the money for, and how long you're keeping that loan on the books. If it looks like a mortgage and you're paying back your company like a mortgage, then yeah, they're going to step in. But I've done that. I've taken money out of my business to buy a house, and then I got 2 years to put that money back. So I can spread my dividend out over a couple of years and pay it back. So, take zero pay, continue to pay myself, but don't take anything. End of the year, declare a dividend. And when it's due, just dividend the whole thing out. Just delays the tax that I have to pay, but I can do that. Views on Canadian capital gains tax reform. I think it's idiotic. I think it's stupid. If you're trying to create, economic growth, number one driver of economic growth is investment. Period. Investment. By increasing the capital gains exemption rate, what you're doing is saying, we're going to make this less desirable for you to do. So when I say investment, Canada lags behind the US in new firm formation. We don't have a very vibrant venture capital economy, and we don't have a lot of startups in the same space that the US would have. It's healthcare, biotech, technology. That's really the US's playing field. Canada lacks that. Those are high productivity firms. So that shows up in our productivity because we lack a very vibrant sector like that. So when I say investment, if I open a business, I incorporate a business, and I buy a bunch of assets, that's not investment. I mean, that's investment in the business, but it's not the assets themselves that provide the capital gain. It's the increase in the value of the business over time that provides the capital gain. You're buying depreciating assets, but you're hoping that you can build a significant business. When you sell the shares of that business, you have a capital gain. When I sold my business, I faced a capital gains. 100% of it was a capital gain because my cost basis was zero. Now, if it was 60, if the inclusion rate was higher at the time, I would have done a lot worse. It was only 50%. If it was 66%, I'd be like, well, you know, how much more would I have had to give up at that time? Right. So it's being that it's 66%, and being that I can invest anywhere in the world and start a business anywhere in the world, why would I pick a region where if I sell the business, I'm going to lose a considerable amount of the capital gain to the government? Why would I do that? So I am building another business, and that's why I left Canada, because I thought before the capital gains inclusion rate was only 50%. In Costa Rica, it's non-existent. Now it's 66%, and I think, oh, I made the right move. I made the right move. I got it out of there. They're not going to stop. If the Liberals get in power again, if you get in, the worst thing you can get is a minority Liberal government propped up by the NDP. Period. And you will chase capital away. Capital will leave, and GDP per capita in Canada will go down more and more. But the NDP and the Liberals can claim a victory. Under their watch, wealth inequality narrowed. Why? Not because they brought the bottom up, but because they chased the top away. But still, I mean, they can claim victory saying, we're not that unequal anymore. Our Gini coefficient is 0.19. Look how wonderful we are. Listen, let's bring it down to some simple examples. You know, there was you read polls sometimes where it'll say something like 80% of people are in favor of a wealth tax on billionaires. Well, of course they are. Of course they are, because they're not billionaires. That doesn't affect me. I'm in favor of that. If you're going to raise money, I'm in favor of that. Why? Because they're not billionaires. So that's a stupid question to ask. Are you in favor of a tax on billionaires? Yeah. I mean, if it's not me, but ask anybody, are you in favor of your tax rate going up? No, I'm not. Are you in favor of your neighbor's tax rate going up? Yeah, that's fine. That doesn't make it good policy. That just means that you found something that affects the smallest group of people. And you may think, well, then that makes good policy. Not if that small group of people represents a huge impact in society in terms of the jobs it creates and the value that it adds. So Steve Jobs didn't have to be American. He could have been British. What would that have changed to the landscape of America if the two founders of Google were at Oxford and Steve Jobs was British? Now think about that for a minute. Think about the impact that has had on the U.S. economy. Just Joe, the two founders and Steve, just those three people. Yeah, they're billionaires, but think of the sheer impact that it's had. Think of the sheer amount of employment that Apple has in California and the sheer amount of employment that Google has created, and people who are earning two, three, four, 500,000 a year, who have bought homes in the region, who have bought vehicles in that country, who buy furniture in that country, who buy clothes, who shop. Think of the sheer impact that that has had. We forget about that. Now, if you lose those people, if you lose the next Elon Musk, if you lose the next Steve Jobs, if you lose the next Bill Gates because you've decided that you're going to punish success and they decide to go, you only need to lose two people who start these big companies and create this huge tax base. That's what you risk when you go after successful people. That's what you risk when you start taxing, when you start with these tax rates that are far more interested in wealth redistribution and less interested in wealth creation. It sometimes is important, I think, to reward successful people, even though it may not be seen as something. Why are you giving rich people a break? Well, because they create almost everything, because their capital is absolutely necessary to a vibrant economy. Because if they remove their capital, we're in a lot of trouble. That's why you give them a break. And if we give them a break, we might actually attract capital. Think of that. What if we attract capital? What if we attract just two of these people who 10 years down the road have created a new Apple and a new Google? What if? Why chase them away? Right? So George Orwell's Animal Farm, I think, is a good example for this. What if the horse left the farm? What if the horse didn't work? What if in the very beginning the horse said, I'm out. I'm out. That whole thing would have fallen apart very, very quickly. Well, there's only so much you can do. You can only kick the horse so much before the horse leaves. So I would warn politicians very carefully about taking their most successful citizens and deciding that you don't get to keep what you have earned. You don't get to keep that. That's ours. We'll come for it, and we'll come back every year. And every time we want to do something, we're going to come back and say, a little bit more. What you got? Little bit more. Come on, you still got stuff. I would caution them very carefully on that. I've removed a big tax base from Canada. I'm one person. I'm not alone down here. There are Canadians living down the road that way. There are Canadians living down the road that way, and there are Americans here in the same situation, and more coming every day. There's more money leaving. Look at Norway. Money's leaving. Money can leave unless you shut down your borders, and I would not put it past certain. I don't think that conservative governments would ever do that, but I wouldn't put it past liberal governments to shut down capital leaving the borders and say you can't leave. You can't leave with everything that you have. You don't get to go. Half your clothes stays. Imagine that. They show up, say, no, you got 5 T-shirts. We're taking 2.5 of them. How will you manage short beta if it did not work against you? Where will you cut it if it did not work again? Well, it's not a matter of cutting it. Being short beta allows me to be longer in other places. So I don't know that I would cut it. But it is a good question. I won't know until I see it. I won't know. But I don't have the math in my head to say that of the companies that I'm aware of that have hedges in place, that you looked at 2 years ago, a year ago. Some of these hedges are rolling off in 2024 because they were out in 2019, 2024, 2025. They're going to reset higher. that's going to start happening. So I don't know that you can leave higher for longer. It the longer you do, it has to cause damage. Now, if I think that there's an end to my pain, I will hang on. I can hang on. But if you tell me there is no end to my pain and I don't know when my pain is going to end and I'm already in pain, I may say, why do I keep pouring money into this thing? I'm done. I'll walk away before I lose it all. I think it's just a matter of time. You tell me higher for longer, I can't stay in the game. If I'm going to be long, I got to be short. I got to be neutral on the positions that I take on. In the applied level, you explain a retail investor wouldn't go into as much detail as an institutional one. No. Could you explain why? You're just not going to have access to the information. So, for example, let's say that we're going to price out a gold mine. Well, production is fairly stable over time. So there might be a production schedule for the amount of ore they're going to produce. And you could, they say 13-year mine life. Okay, you got 13 years. You could see what the production is each year. You could sort of model out the production. You can look at the grade of gold. And you can assume that for the first 5 years, they'll get that grade. Then you're going to have to forecast your grade going lower. You figure, well, costs are going to rise at a certain rate, so I'll put that. What's your gold price? Right? Is it one gold price? You don't have a forward curve of gold prices. It would take you a while to construct that, and you have no experience in which to get that done. Now, you may say, well, I'll just use the forward curve to get it done. You're not going to have the data set you need without paying significant dollars for the right types of data sets to get the information that you're going to need to get that done. You're just going to be guessing in the dark. You don't have access to management. You can't ask clarifying questions. You simply have, other than guesses, you simply will not access the kind of information you need, nor are you going to have the skill set to begin to forecast everything that you're going to need to forecast. Usually some of the assumptions built in to these models from larger organizations come from different departments in the organization, so that you don't have to worry about some of the assumptions. They're coming from different departments. It's already done for you. You as an individual aren't going to get that done. Other than it being a good exercise so that you can understand the drivers of performance of the business and you can understand the assumptions that you used, you're not going to get anything of significant value out, because just a guess that you're making without the benefit of the extensive amount of data you might need, the conversations with management you might need, the site tours that would help you, buy into certain assumptions a little bit better. I mean, there's one thing about assessing GM and its battery plants and its EV line. It's a different thing to walk the line with somebody and see exactly what's going on. You're not going to have access to that, but analysts do. There are analyst days, and they get to do that. They get to look and see and poke and feel and ask. You don't have access to that. You're going to have nowhere near the information that they have. I don't know that it's really worth all the work and all the effort, unless you have institutional backing that can get you the data that you need. So you're never going to be as precise. You're never going to be as well informed. However, I will say this: of every company, there's one or two big drivers of performance, and there's usually a good story, whether it be a story of rationalization, whether it be a story of improved synergies going forward, whether it be a story of rapid growth. There's always some story behind the company, and there's usually a couple of big drivers. That's enough. It's enough to know that the value of the company is going this way. Institutions want to know it's going this way. They want to narrow that. It's enough for you to know this. Every company you analyze will go into one of three buckets: a buy, a sell, a hold. Every single one is a trade. If it's a sell, you can short it or sell calls. If it's a buy, you can buy it or sell puts. If it's a hold, you can do straddles, sell calls, sell puts. There's always a trade. There's never any wasted opportunity in any company that you look at. I don't have a forecast for Newmont. I just looked at where it was. I looked at what it's trying to get done. It's trying to sell the mines. The mines it's trying to sell are higher on their industry cost curve. Great, that's a good thing. It's selling mines with lower reserves, ramping up mines with bigger reserves, and looking for synergies with Newcrest and savings of some $1 billion in synergies and cost reductions over the next 2 years. Great. I'm all in for that. And I figured, based on where the gold price was in the first quarter, $3,750 was a good price. See them getting below that, not on a sustained basis, and I was right. They did very, very well. AT&T reported earnings, and they did very, very well on their way to realizing the cost reductions that they're looking for. And in pre-market, they were well over $17. And then they had a tough time back into the 1650, 1640. Tried to sell more puts, couldn't get them, because I was trying to sell the 17 puts going out for June, because I got the May 16s. I was trying to sell the 17s. I was getting a little bit greedy because I thought there'd be more. Wasn't. I will do well on those again. But I didn't do any detailed forecasting for any of that. I just said, what's the story here? What's going on with this company? What's the story? AT&T has a lot of debt. Okay, does management recognize that? Yes, they do. What's management's plan? Their plan is debt reduction. They are focused on reducing debt. Okay, that's the right direction. Good enough. I don't need to know all the details and what every debt item they have is, and what their costs are and how much I don't need to do forecasts on that. You're going to reduce your debt. That's the right direction, period. It's certainly not the wrong direction. It's the right direction. And that's all. Just a good story. And the one or two really big drivers of performance, that's all I need. Main elements for preserving energy in batteries are graphite, aluminum, lithium, cobalt, manganese. Why are you predominantly focused on copper? Anytime you need to move an electron from one place to another, you need copper. Period. Anytime you need to move an electron around. Now you're just focused on batteries. Housing, copper. Any heavy machinery, copper. Utilities, even if you're not even going to get involved in any kind of energy storage, copper. Data centers, lots and lots of copper. Anytime you need to move an electron, period, it's copper. And not only that, you have a structural shortage of copper, a significant shortage of copper. For everything that you want to get done in the world, there isn't enough copper. If you think that if we get $25,000, $20,000 EVs, which, by the way, the Chinese already have, but if you think that is going to create an explosion of buying across the world, copper, 3 times as much copper, 4 times as much copper in an EV as you have in a nice car, copper, you're going to need lots of copper on that. If you're bullish on whether it'll be profitable, but it will need copper, lots of copper. What do you think of the new federal budget with regards to increase? I already answered that. Curious why you don't seem to focus as much attention on the velocity of money and the policy tools to slow the velocity and lower inflation. Um, Velocity doesn't really change much. Velocity is hard to measure. Velocity is sort of an outcome, right? So that you have your other quantities and you solve for velocity. It's um, it's been fairly well. I shouldn't say constant, but it's not a volatile series. I think the last time I looked at velocity had been, I think it was somewhere between 1.7 and 1.9. It really wasn't going very far. We can look it up on Fred and see what the velocity is. Um, I don't know that we have a velocity issue. Whenever you constrain supply, you'll get higher velocity. If there's lots of supply, you'll get lower velocity. Uh, I don't know that is going to give me much insight, being that it is an implied amount. It is solved from other variables. So I don't know. I mean, we say you try to slow down the velocity of money. Uh, you could say that in a different way without actually having to bring velocity in, because velocity is an outcome. So you are trying to affect some of the other variables, which is demand. If you can, the theory is the higher um, the interest rate, the more likely a consumer is to save and defer spending. If the interest rate is above the rate of inflation, which the interest rate right now is above the rate of inflation because you have positive real rates, that would cause consumers to hold back on spending and more likely save. That would lower demand. That's how the theory works. But that theory only works for a small group of people who think that way. Um, I think that the theory would need to be because that's an old theory, by the way. That stuff is really old. I think you would need to rewrite that for a modern consumer society where uh, you are inundated all the time with the life you could have if only you owned this and only you bought this, and you must have this if you're going to be seen in public, and if your friends have this, you got to have this. To a degree that in competition, you wouldn't wear a certain brand unless they were what were the big ones back then? Osaga. I don't know if you remember Osaga. That was the big one. And Nike. You had to have Nikes. You certainly wouldn't have an off-brand name pair of shoes. You'd be made. I mean, that's about it. Really, you had that kind of peer pressure. But today, it is really different. And we live in, I think, a much more instant gratification world where, you know, you can get something in an hour. You can get something off Amazon tomorrow. You don't have to order it and wait 3 weeks. That throws a wrench in the whole idea of higher interest rates should induce savings, because you have such a high marginal propensity to consume. So the idea of raising interest rates to lower demand doesn't work the way the theory would say, that you have to raise interest rates to kill employment. And that's how you kill demand, is to kill employment. To get people to stop spending, you must separate them from their paycheck. Otherwise, if you give them money, they will go to the mall, they will go to Amazon, they will spend it. But I don't think we have a shortage of supply, other than, in certain key areas. But that shortage of supply cannot be solved with a higher interest rate. It can only be made worse with a higher interest rate. Where did I leave off here? Seeing lots of people use credit spreads. You're seeing lots of people. Don't know where you would be to see lots of people use credit spreads to do daily, weekly income. Had a couple go against me. What would be the best hedge for credits moving? and whatever the opposite is. So if you have positive delta and it's moving against you, you need negative delta. If you have negative delta and it's moving against you, you need positive delta. Use the underlying. So if you have a delta of 0.86 and it's getting worse, then you want to short some shares and get your delta. Every share you short is one delta. You may want to get your delta back to 0.5, short 36 shares. It's very, very simple. Put your exposure and use the underlying to re-engineer a new delta. So you'll either be buying or selling the underlying to get the new delta that you want. When I try to look at the annualized return when selling option contracts, should I evaluate the return based on the margin requirement or the total cost of the position? Just the capital that you're putting out, which is your margin requirement. If you're looking at the return, it's just the margin requirement. If the stock is put to you, well, then now you have a different position, and your return will be different if you have a different position. So there is expected return and there's realized return. Your realized return over the year is not going to be the same as your expected return unless everything works out perfectly and you hold everything to expiration and you make every penny. The expected return is just a way of ranking possible investments. But just because you're doing it doesn't mean you're going to get it. It doesn't mean it's always going to work out. So you have to, over a period of time, compare what you expected to get to what you actually got. And over time, you'll begin to make trades based on, well, I usually realize this type of return. And you could sort of, forecast, and, if you continue on the same strategy, what you would do. I don't really get into that too much. Those are outcomes. So I'm, the outcomes will be what the outcomes will be. I focus on the process. Why am I selecting this to sell a put on? If I think, well, if I sell puts, I average 20% a year, so let's sell more puts. Well, it doesn't work that way. That's when you're going to start to mess up. You average 20% a year selling puts if you sell puts on the right types of underlyings at the right time. So you focus on the process. Do you have the right underlying? You can't just sell puts on everything, underlyings. And if you stick with your process, the outcomes will be what the outcomes will be. All right? Where are we here? Hasn't Canada just set in a very as much as capital out of Canada? Your rule for concentration is up to 2% of capital per stock. Yeah. How do I start doing these things if my capital is 5 to 10K? Well, you can't, right? Any option contract would take significantly more than 2%. Yeah, you can't. That's the thing with small accounts is you can't diversify. You're going to have a very concentrated account, very concentrated portfolio. What you need to do is invest conservatively because you want to preserve that capital, because one bad trade could take a significant amount away. You want to invest conservatively. You want to position yourself conservatively and have a contribution policy. So you have an account that's 5 to 10. What's your plan to increase it with contributions? You're going to increase it with your gains, and you're going to increase it with contributions. You have to have some plan to increase it over time. And the trades you make should be safe and should be within your ability to absorb. So they are invariably going to be small trades, unfortunately. I want you to forget about thinking that you can turn 10,000 into 20,000 in 6 months. Maybe somebody's done that. Maybe it can be done, but the odds are against you. The odds are greatly against you of getting that done. You got to get lucky. You got to get lucky with leverage. And I would not advise that because you got to get lucky. You got to get lucky with leverage. And I would not advise that because you could easily go from 10,000 to 2,000 just as quickly. You take a 3-month rate, 5.5%, add 500 basis points on for credit risk because you would be credit risky. And you have a cash and you have you have an absolute benchmark of 10.5%. And your job is to beat 10.5%. Your job is not to double your money in 6 months. Get that out of your head. Your job is to beat 10.5%. Your job is to increase your assets under management by 10% over the next year, let's say, and to beat a 10.5% return. So at the end of the year, you got 20% more capital. Doesn't sound like a lot, 10,000, 12,000. Do that every year. Do that every year. Get a calculator out, 1.2 to the power of, and see how many years it would be. Do that for 20 years and see where you end up. Maybe you have a plan to increase your assets under management by 20% a year, plus you're going to do 10%, right? If you set a benchmark that you can beat, 10.5, just try to beat that. Like, all you're really trying to do is get on first base. That's all you want to do. Never mind about these home run hits. You will have home run hits in your career, but you're not swinging for the fences. You're swinging to get on base. You're swinging to get on base. That's all you're trying to do. Along with your contribution plan, you want to increase assets under management. You slowly, as your size gets bigger, you slowly start to say, okay, well, now I don't have to play with just 2 names. At 13,000, I can now play with 3 names. At 18,000, I can now play with 4 names, and slowly. But you have to have a plan to get there. That includes more than I can double my money in 6 months. Somebody on TikTok did. I should be able to. What you don't see on TikTok are the millions of people who tried to double their money and lost it. You don't see that on TikTok. Nobody gets on TikTok and says, "Oh boy, look what I did." All right? Here's my bus pass. And my basement apartment, and I really blew it. Can you see Tesla shifted from a car maker to a software FSD provider, collaborating with other car makers? Now, I think I would get interested if it did that. If it decided to split itself into 2 and say, because it is a car company, let's spin that off and let's focus on and let's license it to other companies. It's going to be hard for Tesla to license their software to other car companies as Tesla. Because the question will be, are we getting the light version of your software and you're getting the good software? It's going to be hard to get that done. Split it off into 2 companies, make one the licensing company, and I think you've got something. I think there, if your software is just as good as anybody else's software, then I think you have something. Little bit of a glitch on this one. Most car companies are using LiDAR. Tesla is using cameras. Software is not going to travel to the other cars. Or maybe I don't know enough about the software. Maybe with some editing and some other subroutines, other function calls, maybe you can get it to operate with LiDAR, but they're using a different technology. But I think that would probably make more sense, because now you have the entire market, as opposed to saying we need the entire car market to have the entire market. You could convince how many other smaller companies that aren't going to have the software capability and the miles driven to start using your beta version, right? Put it out there, start using the beta version, license it to everybody, split the company in 2. Maybe at some point in the future, that's the inevitable outcome, is split the 2 apart. at some point, that company is going to be weighed down by the realities of the car industry. I don't know. I honestly don't understand, after all these years, the market's absolute willingness to continue to believe the timelines. Oh, he said this year, later this year, we'll get the car, maybe early next year. Yeah, but is it going to be a profitable car? You're going to have to strip it down so much. Is it even going to have the hardware to be the robo-taxi? Because of course you need a certain amount of infrastructure in that car, and that stuff costs money, right? Cameras aren't free. But hey, the fan base is the fan base, and I think Musk knows how to handle it. And hey, listen, all we got to do is promise a few things, and it buys us some time, and we'll be okay. Side and software on the other side. We're seeing success. The UAW having success. VW. May, they're going after Mercedes. I guarantee you there's a team working on Tesla. I guarantee you. And Tesla's laying off 10% of its workforce. I guess a bunch of people in Texas already got their slips, and Austin already got their slips. Well, that's going to make the rest nervous, saying, well, you can't just do that kind of stuff. We need protection. We need some protections in place. And listen, the UAW has had some very visible victories, That's going to mean something. That hasn't been factored in yet, right? That hasn't been factored in to Tesla's future. There is more than likely going to be a union in Tesla somewhere in the next couple of years. There's going to be more than likely. If you look at their operating margins, they're already at car industry operating margins. They're already there. Layer a union on top of that, right? But if you separate the two, then you have software developers on one side, you have the auto company on the other side. Let the auto company be the auto company. Let it live in the economics of that industry. They're more than likely. One of the reasons why Pepsi divested, because Pepsi used to own, what was it now? Burger King, Pizza Hut, and Taco Bell. It owned those and had Pepsi in the fountains. But it couldn't sell Pepsi. They couldn't sell it to other restaurants, because other restaurants would say, why would we give Pepsi money when they're competing with us in this space? So if Pepsi wanted to sell more Pepsi to the other chain restaurants, it had to divest of the restaurants it had, because, well, that's all the Pepsi you're going to sell is the restaurants you have. So they had to sell it off to Yum Brands. I think I got that right. Burger King, Pizza Hut, Taco Bell, or was it KFC? I don't know. They had three that they had to sell off because it hurt their sales of Pepsi. Is it possible that Tesla could be the charging network of choice globally, while also being the software company of choice globally? If they weren't competing with every other car company, it's possible. It's highly possible. But competing with every other car company, I just don't see a GM or a Ford going to Tesla saying, hey, we'll license your full self-driving technology, work on competition who wants to put me out of business, and I'm going to give them money now to put software in my vehicles and think that I'm going to get the same performance. I would be a fool to think that. So I think that's going to hurt them unless they do split in two. That would be interesting in the future. Any thoughts on data centers growth being limited by the local, state, federal energy permitting process? Well, they do take a lot of energy. They do take a shit ton of energy. However, they can create their own energy. You can generate You can create a whole solar array. If you buy the land, you can create a big enough solar array to supply most of the needs or a significant amount of the needs of your facility. You can create your own power plants. Nothing stopping you from creating your own power plants. If you go to any auto factory, they have their own power plant because they can't rely on the utility. They have their own power plant. So if there's a blackout in the city from the utility, they keep operating. Universities that have research, that have hard science research departments, biology, chemistry, lose electricity, you can lose experiments. They have their own power plant. There's nothing wrong with a data center creating its own power plant, which it would most likely have to do, create its own power plant. Will you be doing an applied series section for understanding the insurance industry? In time, yes. It's boring. I'll tell you that right now. There's not a lot to understand. It is boring. I mean, there's no way to put, there's no nice way to put it. Insurance is pretty boring. But in time, yeah, I will. I don't know when, though. They're just more exciting industries, I think. Watch your applied videos about repos and reserves. We are 3.2 trillion reserves. Yep, still far away from 2 trillion. Isn't it a little soon to talk about slowing down the rate of balance sheet runoff? No. 2 trillion was the number they had last time. And that didn't end well in September of 2019. So I don't think they want to get close to 2 trillion to figure out if that's the right number. And they would like to continue balance sheet runoff for a longer period of time. To do that, you're going to have to slow it down. Now is the time to start thinking about slowing it down. You don't want to get right to ample and then stop, because there's variability in reserves. So where is ample, right? If you start to slow it down and there's this variability here, as you're lowering reserves, you get to the point where, oh, okay, this variability is hitting up against this level. So we know where the upper variability level is, but you don't know where it is. You're operating blind because you don't know what the level of ample is. So if you don't know what the level of ample is, much like driving down a dark road at night where you don't know where the road ends, you'd be best to slow down, right? Maybe it's still 100 yards away, but you're still best to slow down and approach it slowly, as opposed to have to slam on the brakes at the last minute and create some damage. So, no, I don't think it's too soon. Started watching Bloomberg. All sorts of opinions. Yeah, everybody, opinions are like noses. Everybody's got one. How do you filter that? For example, rate cuts daily, all sorts of various views. Yeah, we think there will be. We think there won't be. We think rates will be, we think rates are probably going higher. We think rates are here for the next 2 years. We think, oh, you're not going back to the zero line. Oh, you're going to go back to the zero line. I mean, yeah, there's all sorts of opinions. Welcome to the market. If there weren't all sorts of opinions, welcome to the market. That way, if it was most of the time it's consensus, finance would be taught in computer science. None of us would be needed. How do you filter it? You listen to the argument, and you think, well, okay, does this make sense for me? Does that make sense for me? Sometimes some people have good arguments. You listen to them, you say, okay, I see what you're saying. Arguments that you can counter. Other times, like, well, you got a point there. Okay, you got a point. I never considered that. You got a point. I don't let it change my mind. I don't jump from opinion to opinion depending on who's talking. I have my own opinion, and I listen to who's talking, and I think, am I going to keep listening, right? Or have I had enough of this? So some guests that are on, I listen to them talk, I think, okay, I'm not even going to listen to you at this point. it's some of them say things that are incorrect. So they use data, or they say things, or they pick little pieces of data and they say things that are incorrect, that are not quite, that are not true. And you catch it, you go, well, hang on a second, that's not true. So they don't have the full picture. I want you to understand something, everyone that's listening. This is a hard truth to accept sometimes, but the sooner you accept it, the more willing you will be to be critical. And I'll give you some background for this. I used Deloitte one year for my taxes, uh, and they messed up bad. They called a certain type of income another thing, and this is the tax partner. You'd think, well, you know what you're doing, right? Well, they didn't know what they were doing. I have another firm that is doing some taxes for me, and came up with a conclusion on my exit from Canada. I thought, no, 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 no. So I did it myself. I went through my own personal tax return, and I found a lot more room to work with than what was being given to me. And I'm not a tax specialist at all. But in 2 days, I became a tax specialist, to the point now where on my personal tax return, I think to myself, how come you guys never told me about this? Of all the accountants I had doing my taxes, how come you never told me I should have been doing this? When I said, I can't possibly be paying this much, there must be something I can do. Nope, no, there's not. You got, guess what? There's a whole bunch of stuff I can do. I was just never told about. So here's the truth. And the sooner you come to this conclusion, the better off you'll be. The vast majority of people are, the vast majority of people are. There are people out there that know things that you don't know. But if you knew them, you'd know them better. You think they're experts because they have some information about something that you don't currently have, and you don't feel like learning it yourself. So you say, oh, okay, well, that makes sense. Understand something, that most of the people you're listening to are average. 16% are above average. 16% are at least one standard deviation above average. Within one standard deviation of average, you have 68% of the population. 50% of the population are less than average in whatever field you're looking at. You may think, oh, but these are people who went to university, who have their CPA, who are doing taxes. Yes, and in that group, there's a distribution that's normal, and half the people who have jobs are less than average. The other half are above average, but you got to go one standard deviation above. 16% of the population, one in every six people you'll meet are worth listening to. In any field, in anything that you do, 5 of 6 people are average. Will give you average answers to average questions, that if you are above average and you learned what they knew, you would know it better and you would be better than them. It took me 2 days to figure out I was better than most tax specialists I've come across, and it only took me 2 days to figure that out. Most of the information you're going to get is average. So when you listen to all these people on Bloomberg, you think, oh my God, this is the best of the best. In that group of people, there is a distribution between above average and below average for the group. Most of the people you're listening to are average. They're average, with average thoughts and average aptitude for this. So when you listen to some of them and they're talking about this data and this data, and you say, hey, but you're leaving out some of the other. You're picking like thing. It's that they are listening to an average person talk. They're average. That's it. They're just average. Try to find the above average people. It is 1 in 6. 1 in 6 dentists are above average. 1 in 6 doctors are above average. 1 in 6 accountants are above average, right? Half the people you meet in any profession are less than average in their profession, So I don't know. When you hear these experts talk on Bloomberg, ask yourself, yeah, are you one of these average people? because I'm educated in this field. And I think, well, the only difference is they're willing to go on Bloomberg and talk. I'm not. Not that I get asked, but even if I were, not my thing. I'm not into that. I've been asked to be on different shows, different podcasts as well, and be a guest here. I turn most of that down. It's not my thing. I don't want to do the YouTube tour of all of that, and I'm not really looking for that kind of thing. But there are very few people on Bloomberg that when they speak, I listen. I think, okay, well, I know you're above average, but for the most part, average, just average. Tell me what you think about that. So interesting to hear your take on CR. Living in Colombia, it seems that people are generally more hardworking and honest. Where do you think Colombia is heading politically, given the rise of Petra? I don't know much about any of the other Latin American countries or South American countries. I have two staff that are as honest as the day is long. They're absolutely wonderful people. I love them. They're a couple. They're not married, but they're common law. So I think, well, here's an exception to the rule. Little did I know that they're not Costa Rican. So sorry, Costa Rica, I got to take two people out of your win column. They're not Costa Rican. I think there's just something about this particular country and the corruption in this country that breeds a certain amount of resentment for doing the right thing. It's like, well, why bother? Why? But no one is. Why bother? I don't know much about Colombia. I don't know much about Colombia. I can. Where do we leave off here? There it is. In today's market outlook video, you mentioned PCE within GDP report. How does this relate to PCE data found on the personal income and outlook? So this is for the quarter, right? It is the personal consumption expenditure measure for the quarter within GDP, as opposed to it being a monthly series. It's within the confines of the report itself. It's within the confines of the report itself for the quarter. Those 20 Costa Rican families, so they slowed down your internet. Is it? Am I being choppy? Is the internet? Oh, look at that! I'm looking up there, and I guess the one family who owns the cable company did slow it down. I'm looking, and I'm seeing my strength. My strength is lower. Sorry about that. If I have less capital to work with, is it worthwhile to buy at the money calls on TLT for January 25 if I'm bullish instead of selling puts? Well, yeah, nothing will be put to you if that's what you're worried about. The most you can lose is what you paid for the call, so you do have limited downside. Coffee at this time. Well, it is 6:41 here. So for me, it's not that time yet. Besides, coffee doesn't keep me up. Doesn't keep me up. Do you think an increased intake of maple syrup has a correlated effect on mosquito attraction? Well, I did take in a lot of. I think it's uncorrelated. I think the mosquitoes were always here. In fact, I just got bit one, even though I'm inside. But the mosquito count has gone straight up since the rains have started to show up. They love water, and I'm not going to hang around for that. So I still own a home in Canada. I will hang out there for the summer. Currently in the present process of buying a new home. Obviously, it's smarter invest the money, assuming you can earn a better return than the interest on the mortgage. So a house over the long term does appreciate, and you do derive some utility out of it, and you got to live somewhere. So just think about it as you're paying yourself rent, right? You're going to be your own landlord. So you're buying a house, and you say, well, what would I pay in rent? And then you just make paying that money out anyway. So you can say, well, what am I paying more than the rent that I'm paying? And that's the true cost of my house is what I'm paying more than the rent that I would lose anyways. You're going to lose that anyway. So whenever you're looking at decisions like this, you're trying to look at incremental costs, right? So I would probably choose a floating rate mortgage, and I wouldn't choose a fixed rate mortgage. I'd choose maybe a 2 or 3 year floating rate mortgage, because over the next couple of years, your rates will go down. It's not stupid, it's evil. Canada will continue to tax the high producers. Yeah. What's your opinion on housing financialization, the effect on housing prices by REITs versus private companies? I don't know that I have. I don't know that I see that. I don't think that REITs buy a national emergency of any sort, and I don't see why a government would care or even want to get involved in anything like that by suddenly restricting the type of assets that a business can buy, simply because their policies have failed, and their policies have failed. You don't have to rent the house from them. You can buy your own. Oh, that's right. We don't have enough houses because of the regulation and because of the high interest rates, right? So the idea that we can start blaming other people, there's a certain comfort in blaming other people because you never have to admit that you were wrong. It's sometimes, I think, comforting when people in power tell you it's not your fault. Oh, it's not my fault. It's somebody else's fault. Well, who can we blame? And then start blaming other people who are doing what you yourself could have done, but just chose not to in your life pursue that. So I don't know that I would blame REITs or private companies or private investors for any of this. That is sort of saying to them, when you see a dislocation in the market, when you see an inefficiency, when you see a lack of supply and increased demand, don't you dare step in. Don't you dare step in. Well, like, what kind of stupid statement is that? Right? I think that the government is forgetting that 70% of households are long housing. 20% at any given time are always renters. So that we're demonizing a bunch of groups of people and wagging fingers in people's faces and telling people, oh, no more Airbnbs, no more multiple homes, no more small business for you because 10% of people are short housing. And who cares about the 70% that are long? I don't know why we have policies that continually favor the minority against the majority. Unemployment goes to 10%. That means there's 90% employed, but yet we pull out all the stops. We spend billions and billions of dollars to get unemployment back to 6%, 4%. That's the point to pay for all that debt. I don't know why we continually continually ask the majority to suffer for the minority. But that's where we are. A very union attitude, right? Unions are at their heart the sacrifice of the many for the benefit of the few. Do you feel S&P is too concentrated? S&P's always had a concentration issue. If you look at the top 10, they've always had a certain percentage. It is more so now than ever. It is more concentrated now than ever, but it always has had a concentration issue because it is an uncapped index. By uncapped, it means that, like, let's take the S&P 600, the small cap. Those companies can only get so big, period. Now, they can get small, but they can only get so big. Can only get so indexes tend to be more closer to equal. Not that they are, but they're closer. But large cap can only get so small, but they're unbounded on the way up. There is no bound on the way up for large caps. So you end up with these kind of indexes where you have where you have a certain level of concentration. That if there was an upper bound, let's say 500 billion, and then the index would have to adjust the position for anything above 500 billion, you'd have you'd move more towards a less concentrated index, but maybe less representative of what it's trying to measure. But it's the unboundedness on top that will create that kind of concentration. Are zero coupon bonds exempt from the 30% withholding tax? Yes, they are. Aren't they original issue discount under IRS? Policies, but you're holding a zero coupon bond, there is no withholding. At least between the U.S. and Canada, there's no withholding because there's no coupon. As far as anything more, I'm not the original issue discount under IRS. I'm not familiar with that. Why do stock splits usually convey a positive message to the market or shareholders? I don't know that they convey a positive message. A stock split typically means more liquidity in the stock, and more liquidity means a more efficient price, maybe. But stock splits don't mathematically, they don't add value, because $100 stock will go to 50. You'll just have two shares. Your wealth wouldn't change, but it does have positive implications in the sense that, well, now it's more liquid. There'll be more demand for the shares because smaller investors can now come in. It's interesting how the states propose to increase their capital gains a week later. Yeah, it's almost like all the countries are working together. Well, they've got to pay for all of that spending that they've done, right? In your video, you said North America is not laboring society. It's supposed to be a capitalist society. I didn't say that. Could you describe how an individual can come out ahead in this type of society? I didn't say it's not a laboring society. I said labor did not build the country. If labor were the deciding factor, if labor built the United States, if labor built Canada, and that were the necessary and sufficient ingredient, India and China would have been the richest countries on this planet decades ago by a country mile. But they're not, because they didn't have capital. Lots of labor, no capital. The US, lots of capital, far less labor, 5% of the population. So it wasn't a labor-rich country. It was a capitalism. Capital built this country. Labor got rewarded. Capital built this country. There is a deal you make with labor. You say to them, you give me an hour of your time and I'll give you this much money. I'm taking all the risk. So if I do really well, I do really well. If I don't do really well, you get a paycheck and I suffer a lot. You have a paycheck. every 2 weeks, you go home with a paycheck regardless of how I do. So if I do really well, I do really well. The idea that you can come back to me after making the deal and say, hey, we want some of your pile. You're doing really well. We should get some of your pile. That's not the deal you made. You were unwilling to take the risk that I took. You could have taken some of your paycheck and bought shares of my company. You chose not to. You didn't want to put your money at risk. You want the upside when I do well. But what happens in a year where I lose money? Are you willing to give me a little bit back? Are you willing to hand some of that over? Can I look at your pile of money and say, hey, you did very well this year. You give it back. Doesn't work that way. So no, I don't agree in this, record profits mean record deals, the thing the union like to chant. No, you made the deal. You made your deal. You're going to trade hours of your life for some dollars. That's the deal. My pile of money got really big. Too bad. I mean, you could have had some of this pile of money. Nothing was stopping you from buying shares. You chose not to. Well, but that's not how unions work, unfortunately. Labor is unemployed without capital, period. Labor is unemployed without capital. And we are living in a world now where capital doesn't necessarily need labor. You can automate an entire factory. You can automate an entire McDonald's if you had to. You could. Capital doesn't need labor. If labor decides that it wants to be paid an extraordinary amount of money, capital will just say, oh, we don't need you. We keep you around because it's cheaper than automation, but if you want that much, we don't need you. Thank you. We're good. So there is a limit to how much you can pay labor. Capital has to have a return or capital will leave. And if labor wants too much of a return, they can be substituted for capital. So we have to keep that in mind. Capital runs the show. Capital runs the show. Capital, no jobs, no labor. Labor can do whatever. Labor will have lots of, but no labor, challenge, but no problem, right? Any thoughts on how to come up with a business idea? I want to create something, but don't know where to start. What do you like? What do you want to do? What problem do you want to solve? Here's the thing. You don't have to come up with any new crazy idea. You just have to do something better than somebody else. You just have to be better than somebody else. That's it. You just have to be better, period. Even if you're mowing grass, you think, well, how can you be better mowing grass, right? So I have somebody who cuts my grass back in Canada, and they cut my grass. That's it. They cut my grass. Regardless of what my grass looks like, they cut my grass. But wouldn't it be nice if they said, listen, this is the type of soil your grass is growing in. You know that this is the type of seed you need. We can reseed your lawn over the next 2 years because it does take 2 years. These are the types of weeds you have. We can take care of that. We have a treatment for that. But they don't. It doesn't even occur to them. It doesn't even occur to them to move into more because they're already cutting my grass. They're already doing it. And then we'll have some trees here. And we notice that you don't do any tree. And of course, it snows in the winter. If you don't want to cut your grass in the summer, you probably don't want to shovel your snow. And we can take care of that. The amount of extra work that they can do in the springtime, they say, all your windows need to be washed. You don't have to think of something new. You just have to be better. Even just cutting grass, now all of a sudden you're in 10 lawns. Well, those lawns need lawn care. And not only are you on 10 lawns, there's going to be maybe half of them have gardens. Some of them have trees. They have landscaping. You're already in the door. You're already in the door. Sell me on more. Sell me on more. You can already tell that I'm willing to pay to not do any work. Right? But no. What do? They cut my grass. They knock on the door. I give them their $40. They go away. 2 weeks later, they cut my grass. They knock on the door. I give them their $40. They go away. I look at my grass and I say, I got that funny grass growing. I don't like that. I like that nice green grass like the neighbor has, but I'm not going to sit in my front yard for 6 hours every Saturday doing what my neighbor does. But does the guy cutting my grass ever think, does it ever occur to him to take it a step further, to take a soil sample and determine what type of seed grows best in that soil? Does it ever occur? No, no, no. There's so much money that he could extract out of me, but it doesn't matter. So you don't have to create something new. You just have to be better. You just have to be better than the person beside you. So do what you love, but just do it better than anybody else. That's all. You don't have to change the world. You just have to change your life. That's all you want, is a change to your life. You don't have to be better. You don't have to change the world. You just have to be better than somebody else that's doing something. How about we tax the wealthy more, but not affect how inflation increases your earnings? I'm not following that. How about we tax the wealthy more? Give it a try. Let's see what happens. I think that's a foolish idea. We know that $250,000 proceeds right now is the same compared to even 4 years. We know that 250,000. I don't know what you're talking about right now. So you're going to have to give me some kind of introduction to your comments, because I don't know where you're going. Video on the portfolio construction shows how a small account can use leverage on SPY once we have a confirmed bull market and the Fed is behind us. Yeah, you would use you can use a leveraged risk reversal. A leveraged risk reversal is a risk reversal with a delta greater than 1, where you are buying, you're selling an in the money put and using that to buy a high delta call. So instead of having at the money's and synthetic, a risk reversal does this. You're doing this. You're going to sell the put and buy the get as that stock moves, because your delta is greater. Or use futures. Futures are highly leveraged. MES is a nice low cost. I think the margin on that's only like $1,000. And you have a futures contract. I think what's MES is equivalent to 50 shares of SPY without having to pay for 50 shares of SPY. I do all that. That's in there. Options are the best way to get upside, to get leverage. In Costa Rica, you only pay tax on the gains in your IB account, not in your outside managed account. You only pay tax on the money you earn within the country. In Costa Rica, you only pay tax on the money you earn within the country. I don't have an IB account here yet because my residency application is in process. It hasn't been approved. Once it's approved, I get a Dimex card. I need that number to get an IB account. I don't have one here. There's some place in the Middle East with 0% tax on high net worth individuals. I'm just not grasping why they haven't become the center of innovation just yet. You talk about Dubai. It's not that they're this. It's not that they haven't become the center of innovation. There's a lot of companies there. There are a lot of companies there. And they have tax-free zones. Costa Rica has a tax-free zone as well, that if you spend so much in assets in a certain region, then the money that you make there is tax-free. So they do have tax-free zones as well. And in that tax-free zone, Pfizer's there, Johnson & Johnson, Google, Microsoft, they're all there. They all have offices there. Recently, you said that for less than 100,000 investable amount, you would use momentum strategy for stocks with 52 weeks high and low. Do you have related video and applied series? Anything to recommend? Yeah, There are two videos. There is in the portfolio construction. We used momentum using the 13-week, using a stock screener for 13-week highs, and then of course there's a longer video that shows you how to use the 52-week high to find momentum stocks. Right. So yeah, it's in there. We're going to wrap up here soon because it's 7 o'clock. No, not really. I don't regret it. Do I miss things in Canada? Yeah, of course I do. I miss the infrastructure. I miss the nice streets. I miss the selection in the stores. I miss the freedom to buy whatever you want to buy without having to order it through Amazon and through Miami. I miss a lot of things, but I remind myself of the taxes, and I remind myself of the language the government used to describe people like me, and I don't regret it at all. Maybe someday they'll change their language. Maybe someday they won't demonize successful people, especially white straight men. Maybe someday we won't be called all sorts of names: sexist, misogynist, part of the patriarchy. Maybe we won't be called all that. Maybe they'll just look at it and say, hey, maybe this person has merit. Maybe this person earned it. Why don't we just give them the benefit of the doubt? But you've had 8 years of just, it seems, in progressive liberal democracies, an attack on white, an attack on men, an attack on straight, an attack on wealth, an attack on anyone who thinks that we should have some kind of fiscal conservative stance. Why the hell would I ever stay anywhere where you just get pissed on and spit on and punished? For what? Why? I don't agree. I don't agree with the ideology. I don't agree with the direction the government is going. I don't agree with it, but they still keep getting elected. So see you later. I'm gone. It's like being in a toxic relationship. There's only so much you can take before you say, you know what? I get it. You don't really like me. That's fine. That's fine. I'll leave. So I did. I left. Maybe we might get some leaders someday that decide not to call their own citizens names. Oh, I'm racist too. Did you know that our prime minister said, basically called all Canadians racist? All of us, says the guy who wore blackface 3 times, that somehow we're the racist ones. Go figure that one out, right? That we're the racist ones. I don't get it. But when we have somebody and a population who doesn't hate democracy, doesn't hate success, doesn't hate freedom, and stops hating themselves. I think you have a lot of self-loathing people who just hate themselves. Then all this blows over. Maybe when we return back to sanity, I might go back. Maybe when we stop talking about skin color so much, I'll go back. Enough is enough, right? I mean, who really thinks that skin color has anything to do with anything except the left? Except the left. Some of the biggest racists out there. Currently have a dual monitor set up at home for my job and for any trading analysis. Thinking of adding a third monitor. Just curious how you have your personal third monitor. You're just showing off at this point. You have your work computer. Try to do nothing but work on that, and you have your other computer. You don't need a lot. For the most part, you probably need 2 charts up. You need SPY. SPY will give you an indication of everything that's going on. And then you might have a currency up, depending on which currency matters to you more. Or you might have, let's say a particular bond yield up, like the 10-year. And if you have those two up and you keep looking over every now and then, you'll know. I mean, if you see big bars, okay, well, slide on over and have a look. But you don't need 20 monitors around you with 15 charts. I just don't think you need that. So no, I don't think you need. I wouldn't worry about a third monitor. Is it lagging for anyone else? It just might be simply because of the. I'm going to try something here because we're near the end of this anyway. So if I lose you, I lose you. But I'm going to hop. Which one am I? Let me see if this works. Are you ready? I might lose you. If I lose you, well, let's see our question. On the other, I have two fiber lines in here right now. I'm just going to click over to one. I might lose you. We still here? Let me scroll down to the bottom. You tell me if we're still here. I have better bars at this point in time. If I've lost you, I've lost you. Better. Okay, great. I just switched over to the other fiber line. One fiber line was dropping off, and I just switched over to another one. Okay, well, there we go. We're better. I'll answer a couple more here. Let's see what we have. Heard you like T puts at 17. Yep. Waited for a drop below 17. Took the opportunity to sell 30 days, 16 puts, T for 27. Good. I sold 16s for I think 47 before earnings. What do we got? My T's 100 May 16, May 20, May 17th, 16 puts, 100 of them, 42 cents. Where are they right now? Oh, they're worth 4 cents. Oh no, they're worth 6 cents. I'm not closing them. Why would I close them? I'm just gonna. I mean, not that there's a lot of value left in them. $658, but still, I'll let them wear out. I'm gonna keep them. What else have we got here? Anything exciting? ZB is up, ES is up, bonds and market. You were cutting out bad. I think I should be okay now. Yes. Okay, I'm not seeing too many other questions here. Yeah, I think we'll end it here. Let's see if I can find one more. Are we doing applied series office hours? Oh, it's 9/11 there. I keep forgetting about it, and we have such low attendance for the office hours. I'm thinking of just canceling them and turning them into something else. I don't know what, but it's hard to maintain the schedule. And there just doesn't seem to be enough that show up. So I'll probably pass on it and figure out something else instead. Okay. All right. I think we're done. Yep. Okay. It is 7:12 here, which is 9:12 where you are. I've been running for 1 hour and 56 minutes. We're going to end it here. I'll see you next Sunday night. Ciao. I'm going to hit the, where's my end button on here? There it is. I'm going to hit end stream now. See you guys next Sunday.